You did it. You passed the challenge. Weeks of watching the screen like a lifeline. Days of discipline, frustration, and near burnouts. Every loss tested your belief. Every win whispered, maybe this time. And now it's real. The word funded glows on your dashboard like a trophy. You breathe out, finally. Because for once, you didn't just talk about consistency, you lived it. But here's the truth most traders never hear. Passing the challenge was the easy part. What comes next is what separates a funded trader from a flash in the pan. Because when you're managing someone else's capital, the goal is no longer to prove you can trade. The goal is to prove you can protect. So before you rush back into the charts, before you start imagining payouts and prop firm glory, pause. You're standing at the edge of the next level. And this time, it's not about passing a test. It's about surviving the game. You've been in fight mode for weeks. Every trade felt like a final exam. Every entry carried the weight of your identity. Now you've passed. But your mind hasn't caught up yet. You're still wired for war. Still addicted to the thrill of being right. Still chasing that next candle like it owes you validation. That's why the first rule after passing is don't trade. Not yet. Walk away for a few days. Let the adrenaline drain. Remind your nervous system that peace isn't a loss. Because what got you through the challenge, that hunger, that edge, can destroy you in the funded phase if you don't reset. Your new job isn't to fight the market. It's to protect your composure. You're no longer a trader trying to prove you belong. You're a professional managing trust. So unplug, reflect, recover your calm. The market isn't going anywhere. But your clarity, that fades fast when you trade tired. Now that the noise has settled, look back. Go through every trade that got you here. Every entry, every exit, every mistake that nearly broke your streak. Inside those numbers lies your blueprint. What setups built your curve? What time of day made you the most consistent? Which trades drained your emotions the fastest? Passing wasn't luck, it was data. A record of how you behave under pressure. Most traders skip this part. They pass, celebrate, and move on. But the pros? They study themselves like a scientist dissects patterns. Find your strengths, double down on them. Find your weaknesses, cage them. If your strategy worked 70% of the time, make that 70% your home base. No experiments. No new systems. You don't need new, you need proof that repeats. Because in trading, growth isn't about discovering more. It's about mastering what already works. Your goal isn't to reinvent your style. It's to refine it until it becomes second nature. Passing showed you what's possible. Reviewing shows you what's repeatable. Here's the paradox. Now that you're funded, your goal isn't to make more money. It's to lose less of it. The challenge rewarded aggression. The funded phase rewards control. Because your prop firm doesn't care about one monster trade. They care about consistency, the kind that looks boring from the outside, but feels like mastery from within. You're not playing for thrill anymore, you're playing for time. The longer you survive, the more you earn, the more you prove that you belong in this game. So shrink your risk. 0.5% per trade. Maybe one, no more. Because one clean setup with discipline beats 5 reckless trades fueled by ego. Remember this, slow is smooth, and smooth is funded. If the challenge made you a warrior, the funded phase demands you become a monk. Patience is your weapon now. Control is your profit engine. And the traders who last the longest aren't the ones chasing fireworks. They're the ones who learn to love the quiet days. Because real traders don't chase highs. They build foundations. Passing the challenge required hustle. But staying funded requires rhythm. You're not here to win every day. You're here to manage your week. Set your rules in stone. Your max daily loss. Your weekly goal. Your emotional boundaries. Because the market doesn't just test your strategy. It tests your self-control. You need a structure that guards your mind when the charts start whispering lies. If you hit your daily loss, stop. If you hit your weekly target, stop. Because every trade after that is a negotiation between your discipline and your greed. And greed always overbids. Trading isn't about reacting. It's about responding. And response comes from clarity, not adrenaline. Plan your week like an architect. Monday to Friday, clear targets, clear stops, clear mindset. Then follow it like a soldier. This is where 90% of traders fail. They confuse motion with progress. But the professionals? They move less, they think more, and they execute only when everything aligns. You don't need daily chaos. You need weekly consistency. And consistency pays out longer than excitement ever will. Most traders pass the challenge and disappear. They vanish into isolation, thinking that funding makes them invincible. But the truth? Trading alone is dangerous. Silence breeds mistakes. Stay plugged in. Join your prop firm's Discord, Telegram, Slack, wherever traders talk and share insights. Listen, learn, ask questions. You'll find updates on payout rules, platform changes, and the stories of people who blew their accounts after their first withdrawal. Those lessons are free, if you're wise enough to pay attention. Community doesn't make you weaker, it keeps you grounded. It reminds you that the market humbles everyone eventually. And sometimes, a 5-minute chat with another funded trader can save you from a 5-day drawdown. Trading may look like a solo mission, but the survivors all have networks. Because in this business, you don't just need a plan. You need perspective. Stay connected. Stay humble. Stay teachable. That first payout hits differently. You see it, your name, your amount. Proof that your skill has finally translated into money. It's tempting to celebrate big. To buy something flashy, to post the screenshot, to prove it to the world. But here's the truth most traders learn too late. The goal isn't to get paid once. It's to stay paid. Withdraw wisely. Take a portion, maybe half, and keep the rest as a buffer. Because every funded trader hits turbulence eventually. A cushion isn't weakness, it's armor. Don't let your first success create pressure for the next one. Don't turn joy into expectation. The payout isn't a finish line. It's feedback, proof that your discipline worked. So treat it like fuel, not fireworks. You don't need to prove you're funded. You just need to act like it. Because the pros don't chase validation. They chase sustainability. And every quiet, humble withdrawal builds a story louder than any screenshot ever could. Passing the challenge doesn't make you invincible. It makes you responsible. The habits that got you funded, discipline, patience, emotional control, those aren't temporary tools. They're your foundation. Every trade still counts. Every day still matters. The only difference now is the world is watching how long you can last. Keep journaling. Keep reviewing. Keep refining your edge. The market doesn't owe you consistency. You have to become it. Passing was the proof. Staying funded is the practice. And mastery, that's the repetition of calm under chaos. You passed the challenge once. Now you pass it every single day. Not on paper, but in mindset. You did what most traders only dream of. You passed the challenge. You proved your system works. You proved you work. But this game doesn't reward excitement. It rewards endurance. Because every funded account eventually faces a storm. Every trader eventually meets themselves in the mirror of a losing streak. The question is, will you stay disciplined when the market stops applauding? You're no longer chasing the thrill of being right. You're protecting the power of staying in the game. So trade small, stay patient, build slow, because the traders who last the longest aren't the loudest. They're the ones who turned consistency into an identity. You passed the challenge, congratulations. But the real test has just begun. Because funded traders don't chase success. They outlast it.